Hello everyone, welcome, and in this video we're going to be covering trading with the on-side traders using the footprint. So let's get into things straight away. And this will be covered, the general concept, identifying positions, maybe range rotations. I want to cover this in a bit more detail potentially, execution and invalidation and nuance, okay? Other notes, timestamps in the description as usual. There is Exocharts that I'm going to be using within this video. I always get asked this. You can use that for free, link in the description. It's generally paid, but you get 1 month free and a whole course on it by signing up with the sponsor, which is Woo. So yeah, let's get into things. The general concept, most of the time people trade against trap traders. So most people will go, there's a lot of trap traders into a level, and I'll be going over Exocharts and all that concept in a second as well. But a lot of people will be looking at, there's trap traders here, I'm going to now long based upon that, and that's perfectly fine. But this concept is going to be making the most of attempting to trade with newly positioned on-side traders. Okay, so using order flow, you can identify these new positions and use that to give you an invalidation / entry from an already predefined POI, which makes sense to go into now. Now, with that being said, you're going to have to be able to identify positions. So I'm going to cover all of this in a second. You must be able to identify positions for you to be able to recognize this concept. Use the what where method. Now, with this is fairly simple. What is going on inside the candle? OI plus delta. Where are those positions located? Value area / high saturated delta zones, and the positions matrix, which I'm going to cover in a second. So we'll head over to Exocharts. Well, don't know what's going on there. Over onto Exocharts now. So using that what where kind of methodology, most people. This isn't good. I'll close this. Quit that. Using this what where methodology, there's only really two things you want to be paying attention to. What's going on in each candle. Now, it's important. I'm going to draw out this little matrix for you. Now, each candle has kind of got this pie. This is kind of the positions matrix I'm referring to. And in every single candle, there are new shorts opening. In every candle, well, the majority of them. This isn't a good analogy, is it? In each candle, you'll have new positions opening. So we'll draw new longs, new shorts, and then you'll have longs closing and shorts closing. Okay, I apologize for not being prepared on this, but that matrix, every single candle will have some form of one of these, always have all of this up. And it's just I think it's really important just to decipher what's going on within the candle. What are the majority doing? Which bucket makes up the majority? Are the majority new longs? Are the majority longs closing? Are the majority new shorts? Are the majority shorts closing? And the only way to really decipher what that's going on there is through OI and delta and generalizing the data, as I say, the what where method. So with that, the analogy is, what is going on within this candle here? So I'd go two things. So you've got delta positive, so any form of positive delta, that's market buys. Now, we don't know whether that's new positions opening or positions closing, but then you have to look at the open interest. So I'm going to go through a few and we'll catch on to this. But open interest in decreasing positive delta, that is shorts closing into the high, which are market buys invertly, right? So majority of this candle is market, shorts closing. Like I said, they fall into that one of the four buckets majority. And obviously, where are many of those shorts closing? Well, I'd say the value area / where you're getting the most aggressive delta clustering, as I showed here. Where are those positions located? Value area, highly saturated delta zones, etc. So hopefully that makes sense there. The what where method. Again, let's just pick one more candle really briefly here. What's going on here? Well, I'll just pick a random candle here. For example, here, delta's decreasing, so market sells, and then you've got open interest increasing. So these are new shorts opening within this candle. Now, where are they opening? Well, primarily I'd be like, well, within the value area, and you've got a massively, near the POC, massive negative delta, highly saturated red zone there to identify that. So that is how you're identifying positions, looking for spikes in OI to identify new positions, and just using those two and the value area, etc., to identify where those positions are. Okay, so just going back to this here now, hopefully that makes sense. What where method, the positions matrix was, the four, and it's just kind of picking which one makes up the majority of that candle's identity almost. Okay. So execution and validation, I fairly basic this out really, which is upon the drive of new positions or of new positions being opened. So a good example of this would be, so the concept itself, right? if we're just holding this up, rather than looking for new longs to open, for new positions or positions to be trapped, we're going to be trading with new positions that are newly just opening and being caught on the right side of the market. So for example, right here, if we just head over to trading view, okay, and let's just say, for example's sake, you thought this was a great support down here. You really like the support. And prices around here, and you're thinking it's too late to enter or whatever. Okay, this is you've had a predefined level of interest. I think that's the most important part of it. And you've seen this move up, and you're like, well, it's too late to long here. All these positions are opening from here, but no, not necessarily. It's what I would do is really go look at this and go, well, from this low, right? From this low, you then had all of this move here, and we can start to go, are there any new longs opening here that are pushing price up? And I would go, look, you've got a large OI spike here, these are new longs opening, even at the bottom here, but I would kind of refine from using the lowest possible candle in that case. But you look for the large OI spikes with the positive delta and go, look, from this point onwards, from here onwards, even I would say this value area, you could use this zone as a whole and go, if this zone is lost, these new longs who have been pushing price upwards would then be offside, and you can then see a move back down. So this comes in at around 61 to 61,300. You can pick apart this zone as a whole. 61,300. So rather than having your invalidation near the absolute low, right, upon this move up, for example, you can start to use your invalidation maybe here, 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 and it really depends on the time frame you're using, right? It's really, really important to understand that. About identifying these new positions. So your invalidation is the start or the beginning of where these new candles are opening from. Okay, that is really, really important to identify. So if we've got new longs starting to open from up here, then you can start to have your invalidation below this region, and so on and so forth. Invertly, for example, price pushing above a daily level, you can be like, well, there's new longs driving price up. This is your invalidation here, rather than the low. Right, because you can be trading with the on-side traders who are pushing price back above a certain level. Invertly, for example, if, for example, you're looking for a move here, and then you're looking for a loss of a level, for example, a failed auction. I like to use this within a failed auction. There's a whole video on that on the channel as well. But let's say this daily level is lost, and you've got new shorts that are driving price below this level. Well, then you can enter here and be like, well, the new shorts are opening really from here that are pushing price down. So rather than having this as your invalidation, you're using this, and it's still really, really good because you're able to use the order flow to verify this stuff rather than just using arbitrary data to kind of be like, well, I'm gonna have my stop above here. We're using data to be like, well, if this level is reclaimed, if this level, for example, is reclaimed, well, then all these shorts who have been pushing that price down here are going to be offside, and we can then see a further high made, and it doesn't make sense to be continuing with that short bias. So hopefully that makes sense with this. The execution side of things, actually entering into a trade, is kind of arbitrary and discretionary, in the sense that you do have to wait for new longs to be pushing price above a level, and then it's just using the invalidation more so and getting an entry as close as possible to invalidation rather than timing the perfect execution trigger from this trade. Okay, it's more so you see a level reclaimed through regular technical analysis, such as a failed auction or SR level being reclaimed, and then you're using the shorts to invalidate where a level being lost as your invalidation. Okay, so if that makes sense. Whoops. Okay. Again, whoops. This is not good. Okay, so nuances. Best works within range rotation. So again, new longs pushing price back above value. So again, you've got a range here. Value area high, value area low, for example, new longs will be pushing price here, and then you can use your invalidation as where those new longs opening from. Invertly, where new shorts opening from, as I just mentioned. Identifying the positions is a fairly discretionary process, right? So, the only real tips I can give you here are looking for large OI spikes with as much positive delta or negative delta as possible. A lot of new shorts opening within this candle, and you can be starting to use the value area high or low as your invalidation points. But it's more so just identifying the positions. The biggest tip is just looking for large spikes in OI with positive or negative delta in the direction you're intending to move price in towards. Okay, so like I said, for here, I really like these few candles here that are pushing price up with majority new longs here pushing price up. That can be your invalidation, okay, where those new longs have really started to kind of taper off from down there. So yeah, hopefully this is making some sense to you. And again, like I just said, look for large OS spikes indicating a heavily one-sided candle. Again, same as the matrix, the positions matrix thing. It will show that there's a lot of new positions opening within that specific candle, and we can we can be using that as our invalidation, really going forward, or using that, to be like, we're gonna, if this level is lost, all those positions that are pushing price up, they're going to be offside, and we can see a much further move back down in this case here, for example. Again, I've covered this in a bit of detail. There's a lot more stuff to all of this order flow stuff. Again, throughout my channel, go through and watch everything. Hopefully you found this somewhat beneficial. It's not the longest of videos, but it's just a concept that I feel is really, really interesting, especially because we're not just covering, you're not just always need to be thinking about new trap traders. Everyone talks about trap traders, and so do I, and I think they're still great to be trading, but there's also this view of trading with onside traders and newly positioned onside traders, especially as you're seeing a level reclaimed, a push above a level, push back below a level, and using that as your invalidation is really, really good. Helps to increase your overall R, whilst having really technical factors to have your confluence for invalidation. I've waffled enough. Thank you again. Thank you for Woo for sponsoring the video. You can check all this stuff out below. Check all the other videos I've done on order flow, etc., and footprint charts on my channel. Thank you, everyone.